The following is a presentation of TFNN. Trade what you see with Larry Pesavento. Call now, toll free at 1-877-927-6648 or internationally at 727-873-7618. Now, Larry Pesavento.
Hi everyone, Basil Chapman sitting in for Larry Pesavento. I am the host of the Tiger Technicians Hour at noon and also the author of the opening call. And I may as well just say this right now. On Tuesday, this coming Tuesday at 4 o'clock, I'll be doing a live webinar. It's Tuesday, March the 2nd, 4 o'clock to 5:30 p.m. Eastern Time. And the title is, What Impact Will the Tremendous Increase in the Public's Participation in the Stock Market these past few months have in 2021? And we're... GameStop. I mean, this is so timely because I needed to see yet another scramble into these stocks that were talked about a month and a half ago, to see if we can get back in. And we saw that yesterday. A stock goes from 40 to 150. And this is incredible stuff. So it's timely. I'm going to be explaining what happens, what are the implications, what are the negativities, what areas are really going to have been good and continue to be good, what won't. It's going to be a timely, I hope, as always, a timely webinar. All right, let's get to the nitty-gritties. The S&P is down 16. Here's the 1-minute chart. Now, in the Chapman Wave methodology, it doesn't matter what time frame. The pattern's the same. I try to identify the lowest low bar. You want to count each successively higher peak. You alphabetize them, A to G. That's the 6th highest peak, but it's at the 4th highest peak called peak D, peak B, peak C, peak D, that other things can happen. That's number one. So let me just show you right here what we're looking at. We're looking at peak D in the 1-minute chart. Rallied very nicely, a little overlapping wave. Went from a low back at about 6:40 this morning. And that was at about 39.06 or so. And it climbed towards the 200-period moving average. It went to a peak D. It pulled back sharply. And I had shown, actually, I wanted to show this because, you know, the pattern that I talk about very often, and that is, if I can find it right here, there it is. The pattern that I talk about, which is the Chapman Wave falling axe, where you go to a certain point, usually it's D, E, or F, and then you start to make lower highs and lower lows. Much lower lows, and then all of a sudden it forms a support level, and then it breaks out, and then it can go one-to-one above that declining trend line. It's a very simple technique. So you've got your handle, you've got your expanding declining cone. I call it the falling X because it's the X. And then once it breaks that resistance, that becomes a support level, and you should go one-to-one to the upside. Well, look at this. There it is, but it's the upside down one. So instead of seeing it with the handle and the blades falling, this is the handle coming down and rising. And then what I did is I drew in a matching one-to-one to the downside, and lo and behold, the E-mini went from the 39.15 level. It just broke right through the 39.11, and it did a one-to-one to the downside, almost a one-to-one to the downside. It had a little bit of a bounce. Remember, I'm always looking for patterns, and the pattern that I'd be looking for is the H pattern. We call it, we just, as kind of a joke, call it the dreaded H. And there it is, lowercase h. When you come down, you retest that left side low. What happens after that, if you keep going down, dreaded H because it's red and it keeps going down. On the upside, it's that reverse Y, and you break up, you keep going up. So that's important. So where are we right now? We've gone whoops. There's another technique that I use, which is where you try to find the plumb line for the number of bars down or up, in this case down, if you can match it to what you think could be the number of bars up. And there's a particular technique I use here as the cup formation. This is the opposite of the H, the dreaded H, the arch formation. This is the cup. And it went where? It went to peak A, B, C, and then it went to a D. But it failed in that time lapse to go equally from the left to the right side. I have what's called a Chapman wave inside wedge target line. It hit that line. It got repelled at peak D, and then it started to climb again. This green 9-period moving average went to peak F, made two little doji candles. The MACD was holding, and then it broke down. Stochastic was holding, broke down. On balance volume was the tip off right there. It made a double top, almost exactly on that bar, the 1 minute bar. And now we've come down sharply in a arch formation. And that arch formation, does it have the same number of bars? Well, we'll see in a minute. Look, on the left side, from here to that peak F, I usually don't go to the peak. I go to an important candle, but just for argument's sake, I'll go to that. And then I put in the right side right here. There it is. And it took it out in a little longer time frame, but it did take it out. And this would be green because we're on the way up. This would be the plumb line. Normally, I would have gone to this particular, either the E or this particular little doji candle right there. I love to see where everything, the strength dissipates and the support becomes important. All right, enough with that. Let's go to the nitty-gritties. And what are we looking at here? We're looking at, well, I've got the bonds up. This is TLT trading at 139.33, down $1.51. Yesterday's low was 139.16. Today's low, well, we don't know what the low is so far, but it's at 139.30. So let's just see it on the actual U.S. the bond contract. Yeah, look at that. Took it out. Yesterday's low, we're trading at 159. I've been talking about this. I showed it yesterday. Should I do it again? Yes. TNX. Why? Because it's one of the more important things that we're looking at right now. There it is. And we've got leg D in the TNX, the 10-year yield in the daily, leg D in the weekly. This is going to be so important. And just a leg B in the monthly chart. And it's trading at 1449, 1.49% right now. It's up 60.62, 4.46%. That's incredible. This is not a stock. These are bond yields. So this is going to have some kind of impact on the market at some point fairly soon. All right, enough with that. Let's get to our nitty-gritties. It is 9:15, so I'll do the futures again. Can't do the So the futures, Dow futures, came off the high that was made at 32,033. I said to subscribers that I thought 32,000 was going to be important. Would we go right through 32,000, or is this going to become a barrier? These millennial levels, you got to watch them closely. We went through the 31,000 very quickly. We went through 30,000. So we'll see what happens at 32. I think 32 is going to be a little bit of a problem. So we'll see. But here it is. Broke out in leg D. That's what we were waiting for. We looked at the DIA, which I use as well. We're along the diamonds from the beginning of April at about 21,000. And here we are at, sorry, did I say 21,000 on the Dow. It was 211, just under 211 on the diamonds. And we had actually gotten the call options on the exact low, that March the 23rd. That day we bought options. So this is very important because now we've gone to an extreme on the upside with this leg D. And in the Dow, this is actually leg E. And I'm suspecting maybe today we get a peak E, and then we're going to make some decisions. I'll be back in a moment. Basil Chapman sitting in for Larry Pesavento.
Golden ratios give shape to everything in our world, represented in the Fibonacci sequence. These special numbers define the patterns that make up our universe. Not even markets can escape the omnipotence of these ratios. Larry Pesavento is a 45-year market veteran who has published nearly a dozen books on the powerful patterns we find in nature and their relationships with the ever-elusive markets. Larry's newsletter, Fibonacci 24/7, will teach you to harness the power of these natural golden ratios in order to create successful trades. Fibonacci 24/7 is designed to teach the tools you need to identify and act on these undeniable and reoccurring patterns. Sign up for Larry's newsletter, Fibonacci 24/7, and you will also receive free access to his trading webinar, Trading Strong Trending Markets. Try out Larry's newsletter risk-free. All of TFNN's newsletters come with a 30-day money-back guarantee. TFNN, educating investors.
If you're not currently using the TAS Profile Scanner when looking at setting up your trading opportunities, then your arsenal is short a mighty weapon. The TAS Profile Scanner is a standalone piece of software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Headed by Steve Dahl, TAS understands that in today's technological world, the use of top-flight software applications and technical analysis expertise is essential to successful trading in today's market. You also gain access to the webinar that Steve Dahl and Tom O'Brien just hosted, The Best Way to Use the TAS Profile Scanner to Profit. This webinar archive is available for all subscribers immediately upon signing up. All new subscriptions also come with a 30-day money-back guarantee, so you have nothing to risk. Start your subscription by visiting the front page of TFNN.com today, and you'll find the TAS Profile Scanner under the Services tab. Sign up today.
Hey there, I'm Andy Arbertine with Tiger Precious Metals and Stones. Whether you're looking to buy and sell precious metals or trying to find the perfect diamond ring, I'm here to help. I have over 15 years of experience with diamonds and precious metals. You can call me directly at 727-329-8245, and I will personally answer any questions you have and help you find exactly what you're looking for. I will be your personal concierge in the metal and stone business. Give me a call today, 727-329-8245.
Many of our new listeners have heard about The Tiger's Den. The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of the TFNN shows, plus see all of the charts as they happen live and have access to archives of all of those charts. You can test drive The Tiger's Den absolutely free for 30 days and greatly enrich your knowledge of these markets and how to make your money work for you. Details on The Tiger's Den are on the front page of TFNN.com. Call now, toll free at 1-877-927-6648. Internationally at 727-873-7618.
Hi everyone, we're back. Basil Chapman sitting in for the one and only Larry Pesavento. Trade what you see, and we're looking at. I just want you to finish this. We've got a caller on the line, but just give me 1 second here. I want you to complete this. I did it in the update, and I don't think I finished it. So the E-mini right now is trading at 39.05. It broke out of this falling axis, declining trend line. It's gone above it. It has to hold at any break under 3,900 between now and Friday. It's not going to be good. But if there is a push above today's high of 39.34, I'd like to see 39.40 at some point. That'll be very good action. Just quickly, I'll do the QQQ, which is the NDX 100. Trading vehicle is trading down 321, and then I'll do the IYM, which is the this is the Russell iShares. It needs to break that trend line resistance. Needs to get at 226.66 right now. Needs to get to 227. Just real quickly, gold is looking terrible, making the arch formation. This is the dreaded H, yet another one, and it's down 17. It should have been up at 1826. It's not. This is per action. Silver is a little bit weaker than it was. It's down. It's up 12 cents at 27.94. It's holding much better. And we're looking at crude oil. Crude oil is trading down 34 cents, having made a new recovery high. See this Chapman Wave inside track repellent zone in the monthly chart. That's going to be resistance. And just real quickly, I'll get back to the TLT. TLT is down $1.17 at 139.14. We're going to go straight to, we've got Victor in Paramus, New Jersey. Victor, how are you?
Good. We're going to look at Vapo. Their earnings came out. They were phenomenal. Is it going to go back to the breakout around 23? And then after that one, can you look at PLTR again?
Okay, so we're looking at Vapo Therm Inc. It's respiratory treatments. Was an IPO back in late 2018, around about the 15 area, slid down to the 6s, skyrocketed up to the 54 area, plummeted to the 200-period monthly moving average of 20, and now it's rallying, and it had a beautiful arch formation, just exactly what we're talking about. It went to a peak E, it's come back, it's got the pattern that I was talking about. This is funny that it did it. I love to go to the peak D for the 1-to-1 left side, right side price time match. Let me just do this for you. Here we go. Larry's all about patterns. I'm all about patterns. Most of us here at TFNN about patterns. So what are we looking at? We're looking at almost and exact. The conflicting words there when you say almost and then you say exact, but it's really close. I mean, the number of bars to the upside and the number of bars to the downside almost matches, and that 2618 or 2608, 2608 level, that was the low of December the 31st, runs up to a high, and that high was at about 38 right there, 38.46 on the 4th of Feb. It's come down, and it had a good candle, good turnaround. I have to tell you, even with the earnings, I think this is going to go lower. I would not be touching this right now.
So where's it going, you said?
I think you had said the 25, 23. I think it is the next step. If it breaks 25, I'd be careful because there's no real support if it takes out the 24.08 low of the week of the 27th. I would just wait on this. It's in a good area, respiratory treatments, but it's just, if it couldn't do well on that earnings report, I'm just going to say hold off, keep it on your list, and I've just got a moment here, and I'll do PLTR because other people are waiting. So PLTR, it's almost the same story. What I say to you is hold off, have patience on this. I'd rather be buying it after it started to make higher highs and higher lows than this. Look, that dreaded H failed. Hold off on PL, both of them. I'm just going to say hold off, Victor. Call again in about a week. Let's look at it again. Thank you for calling.
All right, thank you. Have a good day.
And we've got another caller. We've got Mike in Santa Margarita in California. Mike, how are you?
Hello, Basil. Nice to talk to you this morning.
Nice to speak with you. You'd like to look at...
I was just looking at the recent action on Tesla Motors, and I wonder if you changed your projected low and the thing that you the chart pattern that you think is relevant on this stock?
So, folks, we've been looking at this for quite some time, and when I made that high of the 25th of January, Tesla at 900.40, I said there's a pattern I'm looking at, the dreaded H, the one we were talking about just a moment ago, and if it took out this left side low, which I wasn't 100%, you can never be 100% sure, especially with Tesla. I said if it took it out, the low of 780.10 on the 29th of January, I suspect we could get a 1-to-1 to the downside, but my projection was the 14-period moving average of the weekly chart, which was at about 708. But my thinking was 690s was really key. If it took that out, and I circled it over here, that if it took out that little circle trend line support, which was also the 50-period moving average of 750, we could get a real big slide, and that could take it to the... And I thought I'd mentioned 635, but 590 to 580 was kind of an area that I thought at some point that would be a little bit, start to show some kind of value in Tesla. So my answer is that the rally, it went to a round number 619 low. Let me just check that because things are moving so quickly. Yep, 619.00, round number low on the 23rd of February. Had a good green candle, but it didn't take out the high. Yesterday it took that high. I suspect there are enough people that still love Tesla that are going to want to buy it. So I'm going to draw this pattern here. Now the low that was made at 619 because it came so swiftly in a pattern that V-shaped pattern says to me I've got to consider that a chunk, at least for this particular phase, a chunk of the major selling has been done. And that what we could be looking at now is a rally attempt, then a roll over, and I would say the whole area of 760, right now it's trading at 720, down 21, but the whole area between 750 and 765, let's call it 770, I think it's going to be tremendous resistance. And if it takes out yesterday's low in an arch formation on a closing base, it must be a closing basis, of 694.17, I think it has a good chance to retest at least 650. Now, I'm not sure whether it breaks 1619 on this particular move down or whether it needs to now find, there's residual strength you can see by the little V-shaped pattern in the on-balance volume and the on-balance and the stochastic. I need to see where that goes and where it starts to fail. I'm completely wrong if Tesla is trading above 810 a week from Friday, a week from this Friday. That says, nah, you got it wrong, mister. That was, and it didn't really have a volume climax it was a big volume on the low 2 days ago. That's something I'm really watching closely, because if it did have a volume price climax, then it can go higher for longer. My thinking, it's going to make an arc formation and come back. And if it takes out, say, the 690 level, then it's probably going to go into the body of this candle of Tuesday, and that was it opened at 662. That it'll test 662. So far, I think the low that was made is a low of consequence, in that I think that there could be a higher price. Any other questions?
No, thank you, Basil. I really appreciate that analysis. You have a nice day.
Thank you for calling. I hope to hear from you again. Thank you very much. Folks, we've got the bell coming up in a few minutes. I'm going to take a break. Questions about oil is a chunk I wanted to do. I'll be back in a moment. And we're looking at the Dow futures at down just the left. And the S&P is down 7. Be right back.
Hi, folks. This is Tom O'Brien. The printing presses are working 24 hours a day, 7 days a week. The U.S. deficit has risen 200% in 1 year with no end in sight. The markets are looking for an additional stimulus bill to get us through this once-in-a-generation pandemic. There is no free lunch, folks. The more stimulus dollars put into the marketplace, the less your dollar is worth each and every day. This is the time to protect yourself with a portion of your portfolio in the metal market. The Gold Report comes out each Monday morning. I bisect and dissect the dollar, silver, gold, the XAU, and the HUI. The Gold Report is a long-term hedge against the dilution of your buying power. The U.S. has put more than $6 trillion into the marketplace in the last 6 months, with more expected in the next few months. The market did and does need the stimulus, but it will have long-term implications on our buying power. The Gold Report comes with a 30-day money-back guarantee. Go to TFNN.com and order the Gold Report now. Protect your buying power. Order the Gold Report now.
You could be making money off the stock market. And if you're already making money off the stock market, you could be making a lot more. Check out TFNN and Tiger TV and get expert investing advice to give you the power to control your financial future. Go to TFNN.com and find the newsletter for you. Whether you're into trading gold, metals, futures, currencies, or options, you'll get advice and analysis to help you seriously get ahead. TFNN also features trading services with a 30-day money-back guarantee for new subscribers, as well as TFNN's Tiger Den trading room, trading software, and educational webinars for all trading levels. And make sure you check out Tiger TV for free on TFNN.com or TFNN's YouTube channel for live financial content from 8:30 a.m. to 4 p.m. Eastern on market days. Stop watching on the sidelines while other people get rich and become the investor you were born to be. TFNN, educating investors.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartleys, ABCs, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
And there's the bell. They're off as they turn the corner from that low that was made right at 921 on the E-mini at 3903.25. They started moving up. You've gone to a PK. You've pulled back. You've held the 9-period moving average, and you've gone higher. And now you're trading at 3908. We'll be able to make the 200-period moving average of 3810. We'll see in a moment. And this is a leg B in the 1-minute chart. I'll be back in a moment to see what the Dow is doing. The Dow is doing, I was asked about oil. OIH is trading up. $4 at 206.46 in leg E. Here's this beautiful cup formation. Here we go, cup formation, right there. And and crude oil itself is trading at, this is Basil Chapman sitting in for Larry Pesavento, is down 37 cents, having made a new recovery high. The last time it was at this particular level was back in 2020. Was that January or was it December this was January, I believe. January was 59.32 in the continuous contract in crude oil, and that was a high in that month of 69.96, and then you see these declining tops. And what I do is I like to take, it's like 3/16 of an inch. I take a green line on the way down at the highs, and then I put in this little pink or red line, and that becomes a Chapman wave inside track repellent zone. If you want, you can also make this an expanding cone formation, and that says, oh my goodness, I don't want to talk about this, but I will. If crude oil starts to trade into the 67.50, this is a continuous contract, 67.50 on a conservative basis, we could take just this right here from 34 to the breakout level of 62, and you could add it. And that starts to look at $100 oil. I don't like to do that because I don't like to extrapolate and then imply that there's just this huge thing going on. But what I would say is sitting in a monthly chart with the MACD strong, stochastic rallying, not great, but it's good at 61%, the blue on-balance volume rallying, and you're about to see the pink 9-period exponential moving average cross the 14, the black 14-period moving average in the monthly chart to turn green, and that's a big positive. I have to say that crude oil, to me, 58 to 56 could be a worst-case decline if there's a sudden pullback. That's all I can say. Hey, let's go to our 1-minute chart because this is a demonstration in real time. There it is. Leg B extends, and what do we do? I didn't have a chance to talk about it. I want you to say we're going from an arch formation to a cup formation. Let me just show you that chart again, if I can actually find it right here. There it is. Remember, I spoke about it. So we're only about 3 core patterns in the Chapman wave. Straight line move up or down. You can see it right here in the 5-minute chart with the Chapman wave automated notation of resistance and support levels. So straight line up or down, that's number 1. Number 2 is a cup formation that could be a V, but it's going from one point down back to that point. What happens at the right side is key. And the third one is an arch formation, red, because if you take out the left side low, you can go much lower. The combination is 1 and 3 in this case, red. 1 and 2 in this case, because that would be bullish. What did we just see? Whoops, let's move it away. We saw the arch formation take out the left side low, and then it went a little bit lower. Now you've seen the cup formation take out the left side high. I would have used as a particular candle because it didn't look like it would be 1-to-1 to the right side. I would have used a particular candle right here to say, hey, wait a minute, this candle right here, that little doji candle that says absolute indecision is really my fulcrum for the what I call the plumb line. And now I put this in. Let's see if it fits. That's exactly what I'd be doing. I didn't do it right now because I was busy. There it is. And it went there. It's 1 bar late, and it broke it out, and it's only in leg B. This is very... And I wasn't trading. I was busy doing the show. Oh, well, I'll get another chance. Oh, my, and it's still going higher. Now the S&P is only down 4. This is really good action. This is really... Oh, so this is the Chapman wave cup and ladle. You know, you've heard, I invested Business Daily. They've had a whole career of what's his name again? Oh, did I just forget his name? Bill from Investors Daily. Absolutely incredible technician. Started the newspaper. I met him when he came to Boston back in 1984 or 5. And he was the first one to actually put charts in. Remember the Wall Street Journal? Nobody had charts. He did the charts. I love that. So their thing is the cup and handle. it's okay. Yes, a cup and handle that fail. I find cup and handles fail more than they succeed. But the cup and ladle, where you break above the left side high in this cup formation in quicker than a leg D, if you can get there in a B or a C, that's really positive. So this is leg B. So that says, at least for now, you've got the whole support of the left side high in the E-mini of 39.15.25. All right, let's keep going. Wow, lost that as a trade. All right, doesn't matter. So here we go. I wanted to show you that. So now I want you to show you. Look, wheat. That's wheat. Where do we go? Wheat made a peak D. It's pulling back from their peak D. It has the arch formation. And the big thing that it has to do in the continuous contract is take out 697 point and a half. That was made on the 15th of January. It's stalling here, but it is moving up. The weekly chart's still peak D and is holding well. Leg D, possibly a peak D. If it doesn't do that by tomorrow's Friday at 4 o'clock, that'll be a peak D for the month of February. And it means that the next highest high will be leg E. Or it pulls back. Wheat continuous contract. Let's look at corn, as we say in the Boston area. Corn is failing. It's down 15 at 542. It went to a peak C. There's no alternate count because in the Chapman wave there is no H. It goes to a G. This could be a G/C, but this is in a containment area, F/B in the weekly chart. Only a leg A. It's gone from the low in the 320s to a high of 570s. This is incredible. You'd expect these things to have at least April of consolidation. And then you got sugar. Sugar, did I say? Yep, sugar. And sugar had a peak D and is stalled right now. Leg D in the weekly chart with a doji candle, and only a leg C in the monthly, so that should still go to a D. I wanted to show you high-grade copper. High-grade copper at this particular point in a leg D. So I'm looking at this and saying there are enough leg Ds in so many areas to say that April could be quite a consolidation month. It doesn't have to be a smash or a crash, just a consolidation month as many sectors take a bit of a breather. So leg D in high-grade copper. No, did I say high-grade? Yes, high-grade copper. Leg E in the weekly chart, only a leg A. Goes from 2 to 4.32, almost 4.40 in a single leg in the monthly chart. Copper's amazing. I'm just going to add this. I spoke about it yesterday. Wood is the iShares for the Global Timber and Forestry ETF, and that's stalling a little bit. Waiting for symbol. There it is. So E/B. I'm just going to sit this one out in terms of the daily notation, but it is a leg F in the weekly chart and a spectacular leg A. So this internationally, I think the economists have been doing pretty well. What am I missing here? I'll be back in a moment.
Are you in the market for buying or selling real estate in the Bay Area, including the surrounding St. Petersburg, Tampa, and Clearwater markets? Tiger Real Estate LLC is a firm that has extensive experience in the Tampa Bay area. Whether you're looking to sell your current property for maximum value, or you're in the market for a second home or investment property, Tiger Realty has the experience across all areas of real estate in the Tampa Bay area to help buyers and sellers make the most informed decisions across all price levels. From the price you should be paying per square foot in certain up-and-coming areas to the type of cash flow investment properties are capable of creating, Tiger Real Estate can help you make the best decision when it comes to all areas of the market. Before you make one of the biggest decisions of your financial future, call Tiger Real Estate LLC today at 727-329-8322 or email us at tiger@tfnn.com. That's 727-329-8322. Call us today.
Back in the day, I joined Hotel California in 2006, and like many of you, was drawn in by, as well as...
Whatever you think about, you bring about. Whatever you focus on grows.
You see, I believe that everything in life happens for us, not to us. And Tom ignited the fire within me to want to learn how to master the markets. So how did I go from knowing nothing about technical analysis to becoming the #1 market timer for the S&P 500 in 2018 and the #2 market timer in 2019? Simply put, I hired coaches with a proven track record, which led me to a whole new set of tools that I created to interpret the message of buyers and sellers. I would love the opportunity to teach you this award-winning set of tools and help you improve your market timing. You can test drive my newsletter service, Mastering Probabilities, for the next 30 days with no risk to you. Plus, you'll gain access to archived workshops that'll take you step by step through my system. Sign up today by going to the homepage of TFNN.com and selecting Mastering Probability in the newsletter tab.
Will the S&P 500 continue to climb? For bold trades on U.S. large-cap stocks in either direction, trade SPXL, SPUU, or SPXS. Directions Daily S&P 500 Bull and Bear Leveraged ETFs. Direction leveraged ETFs. An investor should carefully consider a fund's investment objective, risks, charges, and expenses before investing. A fund's prospectus and summary prospectus contain this and other information about Direction shares. To obtain a fund's prospectus and summary prospectus, call 866-476-7523 or visit directioninvestments.com. A fund's prospectus and summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
The Bull Bear Trading Hour with Tom and Tommy O'Brien. Next.
Hi, folks. We're back. So I had a question. I guess this is right here. It's hi, Basil. You have a request to look at AMC from Ronald in YouTube. Don't forget, you can go to YouTube. We've got such terrific mediums here to be able to show you the charts, etc. And that's one of them. So I'm going to do this quickly in the sense that I'm going to just talk about it at where it is right now. So AMC. This is AMC. This is the entertainment group, trading at $10.10. It's trading at 10.12. It's trading at 10.09. It's trading at 10.15. It's trading at 10. So that's exactly the way it's going. It's up $1.05, $1.03. The fact that it's stuck at this level in the tens, even from last night when I saw it on the ticker, says that this is kind of a copycat because it's really GME, that wasn't the question, but I want to explain something, and that's the reason why for my webinar coming up on Tuesday at 4 o'clock, where I'm going to be talking about what is the implication with so many people now becoming involved in the market. It's exponential over the last few months. You can see when I just wanted to go to that particular symbol, you saw there was a fractional delay, and that tells me that there is a slew of independent investors hitting keys right now. So 483 was GME's high, and it had a little bit of a dip. Well, it was trading in the 5 or 6s, and it had a little bit of a rally. 483, we saw it at 5:30, 5:15 in the after hours that day. That was back in January. It had a little bit of a dip. This is what I call the Eiffel Tower, goes straight up, straight down, and then it came back, went just above the 50-period moving average. Now it's spiked higher. Now, I'm mentioning a GME, GameStop. Why? Because they're in a group. It's a bunch, Robin Hooders. So now the question is, AMC had followed before. It wasn't as strong, had a spectacular move. On a percentage basis, it was just about as strong, but it didn't scream as high in actual points. So what I'm looking at here is that it opened at 10.89, had a high of 11. That's 11 cents higher. This is with all the buying going on right now. Now it's trading at about $9.98, $10. So it's the red candle at the moment. So this is really difficult to talk about in a cogent way, because Dave White had a couple of quotes earlier on, and they express perfectly this euphoria aspect. But the fact that it's in play today, and it had a good candle 3 days ago, and then a really good candle yesterday, and now it went even higher, it tried to fill in the gap. So I'm going to tell you this. My 120-minute chart has at a peak G. It could have recycled, at least for now. The on-balance volume says it should pull back a bit more. There could be a second phase. I like to look at these screamers. as three phases of the day. There's the opening. If they dip and then they scream higher, I like that. If they gap up and then they start to pull back, you have to wait for the whole period from 9:30 in the morning Eastern time to about 11:30. And then 11:30 to noon starts a period that goes into 1 to 1:10 Eastern time. And then you get the later, and then anything can happen at that point. Usually it's a stalling phase. And then the players in the game wait to see, has it got a second kicker? Is it turbocharged? Has a turbo kicked in? Or is there a moment of stalling that happens with turbo? And if that's the case, watch closely, because if at 2:15 this afternoon to 2:25, if AMC is still holding, I don't think it's going to, but just imagine, it's now only up 92 cents. If it's holding above, I'll give you the exact number, I'd be looking at $10.22, and it holds without pulling back under 10 for 30 to 40 minutes, you might see buying into the last hour, and that could just be something else. It could even fill in the gap between the low of the 1st of February, which was at 12.91, having hit 17.25, and that's a 12.91, and then the high of the 2nd was 10.10. So that's the area. So that's the area that I'd be looking at. What would I be doing right now? I'll be in my webinar that I'm going to do. I'm going to include these, and I'm going to say, what do you do if this is you have a high tolerance for risk, so you set that aside. You also have enough liquidity to say, I want to play in this game, because if I'm right, I can do well, and then I can just sit back and relax and not do anything until I'm ready again. Or this becomes a passion, and then it becomes a cult, and then it becomes almost like a drug, and you can't stop doing it until you lose everything. I'm going to be discussing that, because on a day like this, there are ways to play it. There are ways to play it on the shorter term. You use, like I just did here. Let me show you this again. Here's my 2-minute chart. Look at that screamer. What I would have been doing, it held the 9-period moving average. I would have just grabbed it right in that 39 on the E-mini, 39.20, because all the technicals were good. I would have immediately put in a stop, and I would have just let it ride until I saw it broke the left side high, that resistance, and if it kept going. Now, the thing about the opening bell is that's where things can fail. So very few times where in the Chapman wave you might not get your C and D in something like a 1-minute chart, because that's the opening salvo. So at this particular point, the moment it started stalling, I'd be out. So I'm going to teach you how you can just grab it. You close your eyes, you hit it as a buy. You have to have a stop. So if you're lucky enough to have a platform that says you can put your stop in a 2 point, a 3, whatever it is, you can just hit it and let it run. And then I recommend in stocks, screamer stocks like this, take something off. You've got to learn to do that. And if it goes much higher, well, when you woke up in the morning, were you expecting to make such quick money? No. And if you do, be satisfied and then wait for another opportunity. I'll explain all that in my webinar coming up Tuesday the 2nd, 4 o'clock to 5:30 for subscribers. So you have to subscribe, but it's a money-back guarantee. So you could do that and get all my webinars and everything, and then just say, hey, toughies, I'm out of here. But I hope you don't do that, but I'm just saying. So that's my AMC. So I didn't mean to take as much time on that, but I thought it was so important. It was a question. And what I would say is that 2021, we're going to see this happen a lot. And that's going to be, for me, very important as part of what the vernacular we're in. So that's why I wanted to take it. Question I had here. Good day to you, sir. Can you please give me your thoughts on ETHE? Thank you. ETHE. This is Ether. Let me just give you ETHE. This is a Grayscale Ethereum trust. I had this notated because a person in the den doesn't trade this. He actually buys it, buys and holds, and adds to it. So let me just do this quickly. I don't have the notation right this moment. C, and there's your D. Does it pull back sharply after D? Yep, there it is. How many times are you going to see in the Chapman Wave methodology that Ds are so important? In the weekly chart, it's only a B, and it's trading at 17.25, up 60 cents. So what I am going to do, oh, wow, time is flying. How could that be? No, come on. Is that, it's not the end of the show. We've got one more segment to go. I'll do a little work on Ethereum when we get back, because this is part of the vernacular of that whole area. I just want to see what BTC is trading at. Remember, we're in for subscribers long at about 12,400. It's trading now at 51,665. I'll talk about it. I'll put the two together. Be back in a moment.
The reality is that navigating financial markets can be risky. Markets can be chaotic and difficult to understand. Having the latest market advice can help you turn this chaos into a key for creating winning trades. At TFNN, we understand that it can be hard to find reliable market news. That's why each of our market experts offers their very own market newsletter, a must-have tool for every trader out there striving to find an edge in today's markets. TFNN newsletters cover every aspect of the markets so you can analyze the market before you trade. Try any of our great newsletters risk-free with our 30-day money-back guarantee. Just visit the Newsletters tab on the front page of TFNN.com. TFNN, educating investors.
Hi, folks. This is Tom O'Brien. The printing presses are working 24 hours a day, 7 days a week. The U.S. deficit has risen 200% in 1 year with no end in sight. The markets are looking for an additional stimulus bill to get us through this once-in-a-generation pandemic. There is no free lunch, folks. The more stimulus dollars put into the marketplace, the less your dollar is worth each and every day. This is the time to protect yourself with a portion of your portfolio in the metal market. The Gold Report comes out each Monday morning. I bisect and dissect the dollar, silver, gold, the XAU, and the HUI. The Gold Report is a long-term hedge against the dilution of your buying power. The U.S. has put more than $6 trillion into the marketplace in the last 6 months, with more expected in the next few months. The market did and does need the stimulus, but it will have long-term implications on our buying power. The Gold Report comes with a 30-day money-back guarantee. Go to TFNN.com and order the Gold Report now. Protect your buying power. Order the Gold Report now.
Introducing Primal Edge.
Today, it's even more important to take a supplement that complements your health. Primal Edge is specifically formulated to boost your immune system and help with weight loss, better sleep, stress reduction, and the need to detox.
Our early ancestors found all their nutritional requirements in the wild environment. But today, our food sources don't contain the vitamins, minerals, and nutrients that we need to stay healthy and strong.
That's why we need Primal Edge Daily Nutrition. It includes a special blend of ionic, soil-based, vitamins, minerals, fatty and amino acids in an easy-to-use liquid form.
Primal Edge is powered by highly concentrated humic and fulvic acids, nature's preferred delivery system. They've been called miracle molecules because, like sunlight, air, and water, without them, life cannot exist.
That's right, Ellen. They ensure we receive all the nutrition we need to be healthy and thrive. We take it every morning.
Primal Edge, just $89, exclusively at TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
So just before we wrap up, Basil Chapman for Larry Pesavento, I'm not sure if I'm needed tomorrow. I'll try to be here tomorrow. If I'm needed, we'll see. But I will be back for my show at noon today. And, of course, there's great program all the way through. This is the Bull Bear hour coming up next with Tommy O'Brien. And I think it'll just be Tommy. I'm not sure if Tom's there as well. And then it's Think or Swim. Then it's my show at noon. And then you've got Steve Rhodes, you've got Dave White, then Tom O'Brien at the end. Just great program all through. So ETHE trading up 63 cents. I'd be a little careful of this because I think that GBTC, Bitcoin, it's Bitcoin, part of the family, I would say, is starting to stall. I think it's in a choppy sideways move. I'm waiting for it to possibly pull back, and we'll see what happens there. But most importantly, I would put 16. If you're in it, I say if it goes under 16, lighten up a little bit because of this Chapman wave Roman candle on the left here. If you start to break within 2 days below, in this case, 16 to maybe 15.95, there's a real good chance it's going to retest the lows. It needs to try to fill the gap, and you want to see it by Friday without going under 16.90. You want to see this trading at 18.35. That'll say, hey, now I can try to fill the gap, and that'll be good. But the MACD is weak, and the stochastics weekend is giving me right now, it's got that S, meaning that the 9-period moving average is just about to go to a sell mode underneath the 14. I'd be a little careful. Hope that helps you. So let me just say this. On Tuesday coming up, I'm doing a webinar for my subscribers to my opening call daily newsletter, and it's going to involve the slew of new investors and old investors, of course, and some folks now coming back into the market who hadn't been. The middle-aged guys who got so scared out of their wits, they just didn't want to be in. Now they say, well, maybe I got to be in. And that also puts us, getting us ready for some kind of a deeper correction at some point. But in the meantime, what does that mean to the market? What areas are great? The IAI, which I talk about all the time, which is the broker-dealer index, trading at an all-time high as we speak at 92. I should mention subscribers have been long since 45, but this is going to be a big clue. This is the iShares broker-dealer ETF at all-time highs. This is telling us a story. I'll be discussing it all in my webinar on Tuesday coming up. Have a great day. Stay tuned for wonderful programming, and I'm going to be back. If you like my work, we'll follow it up at noon today. Stay tuned. See you later.